there will be thousands and thousands of treasury companies. Just like there's thousands of insurance companies, thousands of funds, thousands of banks. And why will they exist? They will exist because the risk-free fiat credit rate is 50 basis points in Japan and minus 50 basis points in Switzerland and 200 basis points in Europe and 400 basis points in the US, going to 300 basis points soon. And the world wants 10%. Right? And who wants 10%? Everybody. Okay, so the real issue is, how are you going to wrap it? How are you going to construct it? I want it to run on my rails. You know, you can buy Stretch on NASDAQ brokers, but you can't buy Stretch on Robinhood. Okay? How do you get the security to go down the rail? It's kind of like, yeah, I got a hamburger, it's $3, but how do I buy it in London when the hamburger is getting served up in San Francisco? The distribution matters, the container matters, the compliance matters. The marketing matters, right? I mean, do they like you? Do they trust you? So, you know, when I think about Bitcoin treasury companies, I'm like, well, do you have the management team? Do you have a strategy? There's 1,000 strategies, 1,000 ways to do this. Do you have a focus? Do you have a capital market, right? Orange BTC is coming public in Brazil. They'll be the first company that's where the capital structure has been designed to be elastic to support ATMs and the like in that capital market. So constructing the company with the strategy in the right capital market is important. But you know, it goes without saying there's going to be a monster treasury company in every capital market. It won't be us in Japan. It'll be Metaplanet, most likely. Right? There'll be a monster in every capital market, but that doesn't mean there isn't room for 100 other very successful companies in every major capital market. You ask the question, how much capital is there? How much financial repression is there? Right? And yeah, I'm not going to go and issue credit instruments in Turkey because the rate's like 46% or something. I'm not going to go there first. I'm going to go and issue credit instruments, you know, where a 10% seems like a screaming home run, and 10% against a 30% ARR over 20 years, it works out to about 90%